It's 9:37 a.m. in London when I'm recording this market update. We're going to take a look at the markets as we usually do at this time of the day. But let's start off by congratulating all of our American friends for your Independence Day today. I hope you guys are having a good time off. And that also means for us here in Europe and the rest of the world that the markets could be quiet today. If we quickly just take a look at what's going on in the markets, you can see that we're having a bit of sort of lower New Zealand dollar that's sticking out, lower gold prices, and then you have maybe the German DAX down a bit. So that's really what's going on in the euro and GBP and dollar yen. There's not a lot of activity at all. In fact, these markets are flat. Crude oil is down a bit as well, but you know, crude oil declines quite a bit when it declines, so 50-cent decline is not really a big deal. Let's take a look at the market. So this is your euro, and the euro is just pretty much trading sideways here, so I wouldn't get too excited. The price is pretty much bang in the middle here. I think it's futile to try to figure out, you know, if it's gonna bounce from here, here, or here, because at the end of the day, what's happening here with the trading, this is just trading sideways. It's been like this for quite some time, and I wouldn't put any focus on this. If you really want to do something, I think people will probably try to buy down here, alternatively sell up here. GBP USD. So a few days ago we said the break to the downside could probably lead to a decline, which it did, and the market is now down here, creating what could potentially be a inverse head and shoulders. Now some people like to grab this, and you know, it's nothing wrong. As I said many times before, if you think Brexit fears are, overrated, if you think Boris Johnson is going to do a great job, we're going to get some sort of a deal, and the economy's not going to do too bad at all, then, you know, buying here, stops below, and then targeting in the middle in a few months, that could be something. If you're more like me and you think that the economy will suffer for a while, then and the currency is going to take a lot of heat because of that, then a break to 24.78 could open up for the climb to the March 2017 low. As for the dollar yen moved lower as I was hoping for, and pulled back to the sell zone. It's creating what could look like a head and shoulders with a head, left, right shoulder. Might go up a bit more, maybe 108, 108.15, and then I think it's going to go lower. On the other hand, in the big picture, you have a low here, and potentially this treating this as like a major low. And if you look at the daily, maybe we're creating an inverse head and shoulders here as well. Because I think if we trade above something like this high here, we could potentially have that move. And that wouldn't be so unsurprising given the way stock markets are developing. And here's the S&P 500. And yesterday we said, and before that even, I think I said, a break to 29.81 should take this higher. So if you bought here, you should be in profit. What we're dealing with here is a funny looking head and shoulders. This is your weekly chart. Left, right shoulder, head difference gives you that massive target, which will be a 21% move. And then you have a break to the upside here, which should lead this move to the upside. Now I was thinking about this yesterday. So the US stock markets open up here. So if we would reach that target, the market would be up with 42% this year. That's quite wild. So I'm not really sure we're going to go all the way up there. On the other hand, the market hasn't done nothing since 2018. If you would have bought in 2018, when the market was, when that year started, then you would be up with 12%. So it's not that good, really. 12% in pretty much, well, 1.5 years. So from that perspective, it has a bit more to catch up with. But maybe more realistically, you know, we'll maybe move up here, end the year 32% up. So what could cause that 40% move then? Well, if we have a deal between US and China, which we don't have right now. I'm still surprised really that we are where we are, because I think the non-farm payroll is going to be bad. But as to say, you shouldn't fight the charts, and this is a great opportunity because it's a breakout of a multi-year pattern. And we talked about again buying down here already, and I think The initial stop loss was here. That can now be reduced to this level here. And I think any pullbacks too towards this level is going to be bought. And the short term, you know, you can just go for like small bits and pieces, but definitely upwards. German DAX, we talked about buying here. Market went up here as a book half of the profit, and we continue to go upwards. We did trade above this high here from August 2018th. The next high is the July 27th high. That would be the next reasonable target. Now, the current situation with that little push to the upside reminds me a lot about this opportunity here. You might remember the market sort of went all the way down and then quickly upwards, and then it had a bit of a break and then went up again. And then, as I said it here, when we're trading here, I said we need a pullback, and that didn't happen, but eventually the price moved back down. Why? Because if you look to buy up here, your risk reward ratio is just going to be terrible. If we reach that high, you buy up here, yes, you can put a stop loss here, and you can do something like that. Risk reward ratio is 1.68. But then the market, you really have to be convinced, and I'm not that convinced. In fact, these sort of short-term lows, they're not really that interesting because they fail quite often. That's why I don't even bother anymore. I tried that for many years. I don't bother. That's why stop losses goes at important lows, maybe down here. But because this moved so much to the upside now, we don't have to put the stop loss here. We can just put it here, because if it's a genuine uptrend, touch that breakup point here, people are going to be really cool, or not really cool, but really interested to go long. So here, from pretty much 12,406, that's where I want to get involved if I was forced to trade this market. So stop would go down here, if I buy here, and then if we just revisit the high, that's 1.76 times risk reward ratio. And if we visit this level up here, it's a 3.21. And what I do here, very important to remember, I go through all the markets. I don't care if it's the German DAX, if it's the FTSE, Spanish stock market, Taiwanese stock market. I trade anything, as long as risk reward ratios make sense, and as long, of course, we're not buying something stupid like tulips. If you know that story. Something that makes sense, something that has some sort of value. You can buy cryptos as well, if you think you're clever enough to get out before everybody else sells. And that's it. So those are stock markets. As for the price of gold, gold makes sense if you treat this as trading sideways between this low here and this level here. I said it already a few days ago that I said as long as you trade above 1375 when we're trading up here, you can probably go down and then upwards, and we will remain within this range. Now you can quickly see how that quickly moved upwards. So now it's just trading lower. And yesterday I put an article on this on Investing Cube. So Investing Cube is the new website I'm managing and I set up, and I put some analysis here. You can actually just click here, commodities, or if you want to go to the tags, just click here. So for example, gold price. Let me scroll down and find the analysis here. So I said here, gold prices could pull back to this level before heading higher. Because if you see this as a range, then support is down here, and the last major low is down here as well. So people are not going to be buying up here or here, because again, if they buy up here, next stop loss on its low is down here, alternatively here. So it's only if you have a very long-term view you would do that. You know, you still get a 1.3, but why not wait a bit? From this midpoint here, if stop loss goes down here, if you just hit that high, you get a 1-to-1. That's really important. And then if we go all the way upwards, you get a 3.1. So that's why I'm anticipating this market to bottom out here. And let's see what happens over the next few days. It can easily trade slightly lower, but I think this point here, the 50, maybe a little bit lower, and then I think that's it. Here are crude prices. I wouldn't get too excited. I think they're going to trade sideways between 53.50. Sorry, yeah, 50.53 and 59.77. You know, we went up and up and up and up, and now we need to have a correction of this move. So if you look something like the 4 hour, I mean, you don't even have to have a Fibonacci on anything here. You can just see that this level here, the breakup point, sort of separates this section from this section here. Like this is one range, and this is one range. These are like little doors or gateways. You walk into the wall, you walk into the wall, you go down, you burst through the wall, and now you're in another room with different experiences. And then you go from this wall, and then tries to sort of figure out where the next level is. And then when it comes down, it will be something similar again. It will try to go down, maybe bounce off, and then if it breaks through, it goes back into the old range. So you see that as the interval, and you just understand the prices are stuck in these intervals. As for this right now, the market went down, and there's obviously intervals within the intervals, and this interval here, and this interval here, and then whatever's down here. So my idea here was just gonna go up, people gonna sell. But you can see people got a little bit too eager here, and they sold before we touch that sell zone. I think we can go up again though. I mean, by the looks of it, it went up and then went down. Doesn't have too much traction. Might just continue to trade lower, but if one is not involved from the right spot, then I don't think it makes sense. Risk reward ratios here are not that great. So trend funding level is at 59.77. So we go down here, we'll make 1.45. It's only if you quite bearish, then you can start to sort of imagine these sort of levels. But I'm not that bearish. And I think that's pretty much it. Let's see if you guys have any questions. And if you haven't checked out Investing Cube yet, I strongly recommend it. Okay, so no questions. I'm wondering if I'm even broadcasting. Yes, I think I am. Maybe because of the holidays or so, people not really in, which is fine. Yes, check out the sales section here. Like my daily, pretty much all videos I do here come up here, populate immediately. You have analysis here by Nicholas and by myself. We do different things, Forex primarily, but definitely indices, definitely commodities. And then we have a bit of shares, not doing that too often. And we just added some trading education. So here's an introduction to Forex. I'll send you that link here. You can check that out. It's going to be more and more analysis. It's not going to be too many because we're more of we're a news site and not necessarily like a pure education site. I do have education. We have premium education via ATFX for any ATFX account holders. Good morning, Anas. I hope you're doing well. I received your message, didn't reply yet. I was hosting a webinar on Tuesday. See if I can reply to you a little bit later. I hope you're having a good day. And anybody else that is watching, if you want to be added to my WhatsApp feed, then just reply to that link. Very easy way to as well to get hold of me if you have any questions. Anas, have a great day. I hope you find the car you want. And I'll see everybody else and Anas, of course, tomorrow at 9:30. And don't forget to check out investingcube.com. Everything is pretty much free here, but you can also register. And that gives you access to more content, really. Okay, have a good day, and I'll see you guys tomorrow. Bye-bye.